As US inflation hits 7.91%, negative impact on Bitcoin price looming? Hello, I'm Crypto Casey, and welcome to another episode of Crypto This Week. Every Sunday, we explore the latest global news stories affecting the crypto markets, as well as the ever-changing macroeconomic environment of the world at large. If you're interested in seeing more content like weekly curated news and how it affects the crypto markets, please let me know by liking this video, subscribing to my channel, and clicking the bell notification to stay up to date on all of my latest videos. Before we get started, just want to do a quick shout out to iTrust.Capital. If you're interested in trading crypto tax-free within a tax-sheltered retirement account, like a traditional or Roth IRA, iTrust.Capital is a great option that I personally chose to invest my funds with. They have the lowest transaction fees in the industry at 1%, and their monthly service fee is non-existent, $0, which is unheard of with retirement account services both traditionally as well as with other crypto retirement service providers. And soon they are slated to become the first and only crypto retirement account service provider that supports DeFi functionality, allowing us to do cool things like accrue staking rewards, all tax-free or tax-deferred. Very neat stuff. So scroll down to the description area below to access iTrust.Capital's correct and official site, all while supporting the channel. There is rampant scamming activity happening in the finance and crypto space right now, with people and bots creating duplicate social media accounts of influencers and educators in the financial space like myself. The only official accounts I have are listed in the description area of these videos. Anything not listed in the description area of these videos is 100% a scammer. I will never direct message you. I will never ask you for money or crypto. I will never ask you to install profit generating or mining software on your computer. I do not offer consulting services. I do not offer investment services or anything remotely similar. So only use the links in the description area to access my only official profiles. And please make sure to report any other scam profiles that try to follow you and message you, because their only goal is to steal your money in crypto. So stay vigilant during these crazy times, crypto fam. Awesome, let's dive into Crypto This Week. What has become painfully obvious the past few years since the onset of the pandemic is finally being admitted by regulatory officials. Americans will likely see uncomfortably high inflation this year, Treasury Secretary Janet Yellen says. Wow, it only took an invasion, war, and bloodshed for her to finally capitulate to the reality we've all been living in. Because massive rampant money printing would have definitely kept inflation transitory. But now, since Russia invaded Ukraine, uncomfortably high inflation for the duration. Thanks, Janet. Good looking out. In all seriousness, though, things are not looking good and getting pretty scary out there. What's up? Everything. By a lot. Gas prices rise as people return to the office and their commute. Gas prices are hitting record highs just as some people are returning to their offices for the first time in 2 years. Now, some people are questioning whether this is the right time to go back. Also, skyrocketing gasoline prices place unbearable burdens on rideshare and delivery drivers. Rapidly rising gasoline prices are placing financial burdens on rideshare and delivery drivers for such companies as Lyft, Uber, and DoorDash. These drivers, who are classified as independent contractors rather than employees, are among the most exploited sections of the working class and had already been making meager incomes and few, if any, benefits. The steeply rising price of oil will have widespread and very painful impacts on the working class as a whole. Russia is the world's third largest supplier of crude oil. With that source being rapidly shut off by US NATO sanctions and other suppliers not able or willing to ramp up production at a commensurate rate, the price of oil will almost certainly continue to increase rapidly. This will drive up not only fuel prices, but also a wide range of commodities and services dependent on transportation or on oil as raw material. And that's not all. Diesel's cost climb could hit consumers harder than record gasoline prices. Diesel fuel prices are a key variable input cost embedded in prices for US food and consumer goods, since those goods are chiefly moved by rail and truck, especially in what is referred to as the last mile in reaching retail outlets and grocery chains, said Brian Milne, editor and product manager at DTN. Wow, extremely bearish. And even if you work from home, don't have a lot of commuting demands, and drive a Tesla or something, rising gasoline prices will cause almost everything to become more expensive. Goods and services around the world rely on delivery trucks, which means food will skyrocket, shipping will skyrocket, airline tickets will skyrocket, any and every physical good or service will skyrocket. That's not all. If you think we have a labor shortage now, consider all of the people that work in hospitality, the medical field, and any other industry that requires them to be physically at their place of business, and how we are rapidly approaching a point where their wages will just be enough to cover their commute, meaning that they are literally just working to pay for the gas they need to get to work. Completely and absolutely unsustainable. And this is only exacerbated by rising housing costs, where people have been forced to move farther and farther away from main city centers, now living in suburbia and having to commute farther and farther and farther to their place of work. Horrible. And just when switching to an electric car sounded better than ever, nickel chaos resounds from stainless steel to electric vehicles. Nickel is a key ingredient in both stainless steel and electric vehicle batteries. The London Metal Exchange's suspension of nickel trading after soaring prices left brokers facing huge margin calls, has also upended the market for a key industrial commodity. Not good. Gasoline, diesel, metals, what else? Russia's invasion is about to make the world's chip shortage way worse. 2 Ukrainian companies responsible for producing around half of the world's semiconductor-grade neon have shuttered. Russia's invasion of Ukraine is putting even more pressure on an already strained global computer chip supply. So basically, the US may be slowly slipping into a state of stagflation. What is stagflation? Stagflation describes an economy where 3 things are true. 1, GDP, or gross domestic product, is weak, and GDP is just a fancy term that represents the total value of goods and services produced in a country. 2, low employment, which between the pandemic and skyrocketing cost to commute is not looking like it's going to recover anytime soon. And 3, inflation, which is the increase in cost of goods and services. So the word stagflation is just a combination of the word stagnation, used to describe weak GDP and low employment, which represent a stagnant economy, and the word inflation, used to describe the price increases of goods and services. Stagnation and inflation equals stagflation. Clever, eh? This week, the day the market has been waiting for since the dawn of the year 2022, is upon us. On March 16th, we will finally find out if the Feds are going to raise interest rates or the cost to borrow money, and if so, to what degree. For now, it seems like a 25 basis point increase is priced in, since it's the most likely outcome. However, if it turns out to be above that, we will likely see a potentially sharp decline in both the traditional and crypto markets. However, if Federal Chair Jerome Powell reveals that the Fed is kicking the can down the road and is not doing an interest rate hike next week, we will likely see a potentially sharp increase in both the traditional and crypto markets, as Wall Street and big financial institutions will still have a lot of free money to throw around. What's interesting is despite the impending potential interest rate hike, more than $1.8 billion pulled into crypto companies and funds this week. Lots of fresh capital entered the crypto space this week, up 36% from last week's $1.34 billion. Why is it so? Probably because this week, Biden's executive order boosts prospects for cryptocurrency. Joe Biden just gave crypto companies the green light to exist. David Washman, the CEO of Washman PR in New York, told CBS News Streaming, "What they have to do now is behave responsibly." Brilliant. And as crypto investors, besides that pesky March 16th date, here's something way more interesting and compelling we have to look forward to. Ethereum launches the final proof-of-stake testnet. The actual live launch then follows this summer, when the entire Ethereum network, including DAI, Curve, Ava, as well as things like Decentraland or OpenSea, start running on validation from stakers rather than GPUs from miners. That should make ETH investors very happy because the cost to run the network, which they pay, will reduce from about 14,000 ETH a day, or 36 million, to just 1,387 ETH a day, or 3.6 million. 7 years on, and after so many setbacks on the way, this time it's actually happening, whereby Ethereum will achieve one of its main goals in becoming an environmentally friendly global financial network with fixed monetary parameters. Super bullish. So all in all, the crypto markets will be at the mercy of the impending interest rate hike announcement this coming Wednesday on March 16th. And once that happens, I think things will become a lot clearer price-wise short term. We could be, and unfortunately most likely, are facing a recession. The question is, how will crypto perform under these circumstances? Are we in a bear market? Are we headed towards a bear market? Will crypto finally decouple from the traditional markets and behave more independently? We're going to find out soon enough. At the end of the day, we all need to be aware that crypto scams are growing, says key bank regulator. One of the problems for consumers with crypto, said the OCC chief, it is hard to find neutral, trusted sources of information on the asset class. Consumers are left with an information landscape dominated by a lot of hype, jargon, attractive yields, and only boilerplate disclaimers about the risks they could face, he asserted. And that's my personal commitment to you guys and my ultimate aspiration for this channel, to be a neutral, trusted source of information on this new, exciting digital asset class. And there are a ton of risks in this space, in the financial industry at large. So if you are interested in further securing your crypto investments, I made a video about different products and services available we can use, and you can check it out by clicking on the link above. In it, we discuss services like NordVPN and the importance of protecting our data and privacy by using a VPN or virtual private network as crypto investors. And using the link in the description area below, you can get 70% off of NordVPN's 2-year plan plus 1 month free. In the video, we also learn about a guaranteed way we can 100% avoid becoming a victim of a SIM swap with Afani, using the most secure form of two-factor authentication using YubiKey devices, the importance of investing in and using cold storage hardware wallets like Ledger devices or BC Vault, and much, much more. Here's the deal. We are all taking the time to learn about and invest in this new, exciting technology. So why not take some time to learn about and invest in further protecting these assets we are working so hard to acquire? Yeah, so make sure you check out that video and share it with any other friends or family who have decided to embark on this crazy crypto journey together. Awesome. Well, that was Crypto This Week with me, Crypto Casey. If you enjoyed the episode, please make sure to like this video and subscribe to my channel for more crypto content. Also, click that bell notification to stay up to date on all of my latest videos. So what do you think about all this crazy inflation? What do you think the Fed is going to do interest rate-wise? Are you pumped for the completion of ETH 2.0 this summer? Let me know in the comments below. Be safe out there.